when we are analyzing the deviation, it is important to know what is the degree of deviation. Two methods of analyzing the deviation. The first method is critical point control. The second method is management by exception. What do we mean by traditional techniques? Traditional techniques are those techniques which are followed for a very long time in the industry. Hello everyone, I am Purnima, faculty in the Department of Commerce, Vidhyaashram Pre-University College, Temple of Excellence. In this session on the chapter Controlling, I will be dealing with the controlling process, and also I will be discussing about the various techniques of managerial control. Now, in my previous session, I have just told you the meaning of the word controlling. So, as we all know, controlling and planning are inseparable, and controlling is the process through which we ensure that all the activities of the organization are run as per the predetermined plans. Now, let us look into the controlling process. Now, in the process of controlling, we should understand it has the following steps. Now, what are the following steps? Just let us look into the steps in controlling. The first step in controlling is setting performance standards. So, standards are the criteria against which actual performance would be measured. Thus, standards serve as benchmarks towards which the organization strives to work. So, in the first step of controlling, so we have to set performance standards. Now, what do you mean by performance standards? So, these are the standards which are to be set by the management, and these are the benchmark towards which each department of the organization has to work. Now, these standards can be in the form of qualitative standards or quantitative standards. Now, in this slide, we can see that there are various types of standards which we can set for the work to be carried out in the organization. So, the standards can be set both in quantitative as well as qualitative terms. Then, what do you mean by quantitative and what do you mean by qualitative terms? So, quantitative terms means we can just measure in terms of quantity. For example, the number of products to be produced, then we can also measure the number of labor to be introduced into the organization, which we can also see what is the cost to be incurred, what is the time taken for each job. So, all these activities of the organization, they can be measured in actual quantitative terms. Now, there are certain aspects of the organization which have to be measured in qualitative terms. For example, the level of goodwill of the organization, then we can also measure the loyalty of the employees of the organization, the morale of the organization. So, all these are qualitative terms for which we can also set some standards. For example, for the sales department, we can have the standards regarding quantity of sales. Then we can also have the standards regarding the salesman's performance, etc. And then if it is the marketing department, we can see we can set standards for the expenses relating to marketing. We can also set standards for individual performance of the salesman. Then if it is the production department, we can set standards for the quantity of output, quality of output, and also the individual output of each worker. So, in this way, we can see that for each department, we can set the standards in terms of quantitative terms. So, when we set standards in quantitative terms, it will be helpful for us in controlling process. Now, in the second step of the controlling process, we see that measurement of actual performance. Now, let us see what this means. The performance should be measured in an objective and reliable manner. There are several techniques for measurement of performance. The performance should be measured in the same units in which standards are set, as this would make the comparison easier. Okay, so in the first step, we have already set the standards for each job. Now, in the second step of the controlling process, we will be actually measuring what is the work to be done, or what is the work which has been already done. Sometimes some of the management specialists feel that this job should be done only after the entire work is completed. But then there are some other management thinkers who feel that whenever the work is carried out, we should do the measurement of performance standards. So why it is necessary to see actually what is the work being done? It is necessary because whenever there is a slight deviation in the job, we can always set it right at that point itself. And also, whenever we are measuring the performance of the individuals, we should see the aspects relating to the production, why the production is running behind schedule, or why the cost of the product is increasing, or why the quality of the product is not up to the mark. So these are certain aspects to which there should be proper attention and care should be taken at the right time, and there should be corrective action to be taken at the right time. So if the corrective action is not taken at the right time, it may lead to further losses in the organization. Now, how can we do this measurement of the work to be done, or how do we do the measurement of actual performance? Now, this is done by personal observation and also through statistical analysis of the reports, and also by the reports given by the boss of that particular department. Now, the next, if you can see here, they have just elaborated on the measurement of the actual performance. The measurement of a company's performance may involve calculation of certain ratios, right? Gross profit ratio, net profit ratio, return on investment, etc. at periodic intervals. Now, we can calculate the measurement of a company's performance with the help of these ratios. Now, these ratios like gross profit ratio, that is, what is the actual profit earned by the company based on the sales of the company, and also the net profit ratio. Net profit ratio means the net profit ratio based on the sales of the company, and also the return on investment. What is the investment made by the company and what is the actual amount of returns it is giving, and at periodic intervals. So when we calculate all this, we can always know whether the company is in a path to progress. Then next, the progress of work in certain operating areas like marketing may be measured by considering the number of units sold, increase in market share, etc. So this is one very easy way of checking about the effectiveness of the marketing department. So it is very easy. You can assess the success of the marketing department by just knowing what is the amount of sales in each interval. Suppose it is the weekly sales or it is the monthly sales, whatever is the sales of the department, we can just collect information and then know whether the marketing department is doing its job effectively. Then the third process or the third step in the controlling process is comparing actual performance with standards. Now, how do we compare actual performance with standards? So comparison will reveal the deviation between actual and desired result. Now, what is the actual output of each individual and what is the target set for each individual? This has to be compared in this third step of controlling. Comparison becomes easier when standards are set in quantitative terms. So we set a standard for 100 units for a week for each individual, and if that person reaches 100 units per week in each for his performance, then we can say that that person is performing very well. Suppose we have set a target of 100 units, and if that person does not reach, he reaches maybe 80 or he reaches 90 units in a week, then we have to analyze the reasons why that person is not reaching that much. So that will be in the next step of the controlling process. Now in this step, we will be just measuring the or comparing the actual with the standards. Then in the fourth step of the controlling process, we have analyzing the deviations. So what is this analyzing the deviations? Some deviation in performance can be expected in all activities. It is therefore important to determine the acceptable range of deviations. Now, whenever we compare the actual with the standard, we can know that there will be some sort of a deviation. Now, when we are analyzing the deviation, it is important to know what is the degree of deviation. If the deviation is very negligible, if it is a very small amount, then we need not bother about it. But if the deviation is about a very huge amount or a huge percentage, then proper care should be taken to see that the deviations are corrected and all the activities come back to the right track. That is, the activities are going as per the plans. Now, this is the fourth step in the controlling process. For example, while analyzing deviations, we notice that the production sector is running behind the schedule. Now, we have set the target for the production department of 10,000 units per week, but then that unit is not producing 10,000 units. Then what do? We can always hire extra workers, and we can also give them extra equipment, and we can also ask them to do overtime to reach the target. In case some of the workers are not working as per the standards set, then it is necessary for the organization to give proper training to such employees to see that they reach the target which has been set to them. So in this way, we have to see that there is an analysis of deviation and proper corrective action should be taken at the right time. Then next, we should see that what are the various ways we can analyze the deviations. In this, the first one is critical point control and management by exception should be used by the manager in this regard. Now, while analyzing the deviations of any work being done in the organization, there are two methods of analyzing the deviation. The first method is critical point control. The second method is management by exception. Now, let us see what do you mean by critical point control. Now, control should therefore focus on critical key result areas, that is KRAs, which are critical to the success of an organization. These key result areas are set as the critical points. If anything goes wrong at the critical point, the entire organization suffers. Now, we can see here in this image here, critical point control, or this is also called as the CCP or CPC. So, what does it actually mean? The control should focus on key result areas which are critical to the success of an organization. So, in the process of controlling, we should identify those areas which are critical for the success of an organization. Now, the key result areas are First one is the production sector, second one is the sales department. When these two departments are running well, then we can ensure success of the organization. And this production department and the sales department have to coordinate with each other. Only if there is proper production, then right numbers are there, only then we can ensure sales from the marketing or the sales department. So, if there is anything wrong in the production department and the production comes to a standstill, then that will adversely affect the sales department, and when the sales falls down, the actual revenue to the organization will come down, which will have an effect on the entire organization. So, the key result areas should be identified and they should be properly monitored, because if anything goes wrong in these key points, then the entire organization has to suffer. So, the key result areas to be monitored properly and controlled. In the second type of analyzing of deviation, we hear that it is management by exception. Now, what is the meaning of management by exception? Significant deviations which go beyond the permissible limit should be brought to the notice of management. So, whenever there is an analysis of deviations of the work being done, there is a permissible limit for deviation. When the things go beyond the permissible limit, then it should be necessarily brought to the notice of management. Suppose there is a clause like 2% increase in the labor cost is permissible, then if there is a 2% increase in labor cost, then it need not be bothered. So, we need not bother about a slight increase in the labor cost, it is negligible. Suppose there is a 2% increase in the labor cost, then it is a very small or a negligible amount which can be overlooked. But then if there is an increase in the labor cost by almost 10%, then it is something which has to be brought to the notice of the management and immediate steps should be taken. Now, while analyzing deviations also, it is necessary for us to understand why these deviations have occurred. So, what is the main cause for these deviations? They may be, the causes may be the management would have set very high standards to which the employees are not able to reach the standards. Secondly, the quality of the product would have been reduced because of poor quality of the raw materials used. So, these may be some of the reasons for deviations, but whatever may be the reason for deviation, it should be analyzed properly and proper care should be taken to see that there is corrective action which is being taken, and all the deviations should be brought to the right track, and we should take care to see that all the plans are going as per the predetermined plans of the organization. It is also necessary for us to understand why the deviations have taken place. If we do not understand the actual reason for the deviation, it will not be possible for the management to take corrective action. So, analyzing the deviation is one thing. Second one is, we have to actually find out the reason for the deviation. If you can define the deviation in a proper way, then we can also determine the corrective action to be taken. So, it is essential for every organization to analyze the deviations in the working of the organization. Now, the fifth step in the controlling process is taking corrective action. Now, let us see what do we mean by taking corrective action. Corrective action might involve training of employees if the production target could not be met. If an important project is running behind schedule, corrective action might involve assigning of additional workers and equipment to the project and permission for overtime. work. So, while taking corrective action, we should analyze the cause of deviation and then take proper corrective action. Now, suppose the management comes to know that production is running behind schedule, then what should we do? We should assign additional workers, give them proper equipment to do the job, and also give them overtime facility so that they can complete the production on time. In case the labor is not reaching the actual standards set by the management, then what do we do? Then it is essential for us to give proper training to the employees to see that they reach the target on time. This is one part of the analysis or taking corrective action. Sometimes corrective action can be taken at the managerial level also. Now, what are those where we can take corrective action at managerial levels? Now, in this managerial level, suppose we come to know that some of the standards set are very high for the workers to achieve, then it is our job to see that the standards are brought down to the permissible levels. So, in this way, we can ensure that the organization achieves its objectives by proper implementation of the plans and also by taking corrective actions whenever necessary. Now, the next important topic in this chapter is the techniques of managerial control. What are the various techniques of managerial control and how we can ensure that the controlling process goes on as per our schedule? Let us just see what is the meaning here. So, in this, the first type of managerial control is modern techniques. Now, this is the first technique in managerial control. The modern techniques of controlling are those which are of recent origin and are comparatively new in management literature. Now, what do you mean by modern techniques? Modern techniques are those which are of recent origin and comparatively new in management literature. So, these techniques provide new thinking on the new ways in which various aspects of an organization can be controlled. So, in the modern technique, we can see that there are various techniques which are used. First one is return on investment. Second one is ratio analysis. Third one is responsibility accounting. Fourth one is management audit. Fifth one, PERT and CPM. And the sixth one is management information system. Now, the next type of traditional technique is personal observation, statistical reports, break-even analysis, and budgetary control. So, these are the traditional techniques. Now, what do we mean by traditional techniques? Traditional techniques are those techniques which are followed for a very long time in the industry. So, these are time-tested techniques which are being followed for a very long time in the industry. Now, in this traditional technique, let us first analyze what do we mean by personal observation. Now, in this, first one is personal observation. It enables the manager to collect first-hand information. It also creates a psychological pressure on the employees to perform well as they are being observed personally on their job. However, it is a very time-consuming exercise and not effectively be used in all kinds of jobs. Now, personal observation. As the name itself suggests, it is a way of observing the people who are doing the job. The manager himself will be observing how the people are doing the job, or he may appoint an observer to see how the people are doing their jobs. Now, through this method, the manager will be able to collect first-hand information. Now, the main drawback of this personal observation is it creates a psychological pressure on the employees. The persons who are working in the organization, they will be under constant pressure that they are being observed by somebody, and it may create a pressure on them, as a result of which they may not perform well in their jobs. So, this kind of a personal observation is very, very time consuming, and it cannot be effectively used in all kinds of jobs. So, this is the first technique in traditional technique of controlling. Now, the second traditional technique is statistical reports. Now, what do we mean by statistical reports? You can see there are lot of statistics here, and you can see the statistics of various activities which are being done in the organization. The statistical analysis in the form of averages, percentages, ratios, correlation, etc. present useful information to the managers regarding performance of the organization in various areas. So, statistical analysis. Now, we are using lot of information whenever the company is running. So, there will be lot of paperwork which will be done in the organization. So, they will be collecting information regarding the production of the every day in the organization, the sales per day in the organization, and for all aspects, for all departments, there will be records of work being done in each department. Now, once we collect all the statistics of each of the departments, then we will be calculating the averages. Now, what is the average work of each department? And we will also be calculating the percentages. For example, the gross profit for the 3 months of the organization, the net profit, and then also we will be calculating the percentage of gross profit on sales, percentage of gross profit on the raw materials which have been put into the into the production, and also the ratios. So, through the help of ratios, we can analyze whether the organization is running successfully. And then correlation. This correlation is how do we just analyze the demand and the sales? How can we just forecast the sales for the next year? What is the correlation between demand and the price? What is the correlation between the supply and the price? So, all these things can be worked out through the statistical tools. Then, through the statistical reports, the managers will be able to analyze the performance of each unit of the organization. So, this is one of the traditional techniques of controlling. Now, whenever we are giving statistical reports to the managers, when he collects the reports from his subordinates, it may be in the form of charts and in the form of some of the tables which the manager will be able to read easily, and with the help of which he can just assess the performance of each department. Then the third type of traditional technique is break-even analysis. Now, what do we mean by break-even analysis? Break-even analysis is a technique used by managers to study the relationship between cost, volume and profit. Now, we know that CVP, they are interrelated. That is, cost of the product, volume of the product and profit, they are all interrelated. It determines the probable profit and losses at different levels of activity. The sales volume at which there is no profit or no loss is known as the break-even point. Now, through this break-even point, this is an important technique in costing. So, when we start production of a new product in the organization will not reap profits immediately. Then, what is the break-even point at which the organization will earn profits? That can be decided with this technique of costing called as the break-even point. Here we can see that at this point of the organization, there is a break-even point. That is, at this point or the break-even point, there is no loss or no profit. After this, beyond this point, if the sales increases, then there is a room for profit in the organization. So, an analysis of the cost which are incurred on the product, then volume of production and the percentage of profit, all these are contributing towards the break-even point of the product. So, it is necessary for every company to know what is the break-even point, and then they have to plan their sales accordingly. So, through this technique, we can ensure that the profits come to the business as fast as possible. This break-even point can be calculated with the help of the following formula. So, the break-even point equals fixed cost divided by selling price per unit divided by minus variable cost per unit. Now, we all know that in costing, there are two types of cost. One is fixed cost, one is variable cost. Now, what do we mean by fixed cost? Costs which are fixed or that which do not change, those costs are fixed costs. Then, those costs which keep on changing based on the quantity of production, that we call as the variable cost. Now, in the fixed cost, we can take the example of rent of the building, or we can also take the salary of the persons, etc. So, some of the costs which do not change, they are called as fixed cost, and some of the costs which keep on changing, that is the quantity of which we will be using in the production, it keeps on changing depending on the size of the production. So, that we call it as the variable cost. Now, if we have to calculate the break-even point of a product, we have to first calculate the variable cost of the product, and then we have to also know what is the selling price per unit. Only when we know all these amount, then we can calculate the break-even point. Then, break-even analysis helps a firm in keeping a close check over its variables and costs and determines the level of activity at which the firm can earn its target profit. Now, this break-even analysis helps a firm in keeping a check over its variables. Now, we all know that fixed cost cannot be changed. It remains same even if for 10,000 units also it remains the same. For 1 lakh unit also it remains the same. The fixed cost cannot be changed. Now then, what can be changed? The variable cost can be changed. Now, how do we just change the variable cost, or how we can control the cost of a product by adjusting the variable cost? That is the essence of this break-even analysis. Then, through this break-even analysis, we can assess the level of activity, the point at which the company will start earning profits. We can calculate with the help of this break-even analysis. That is cost, volume, profit analysis. Now, the fourth technique under the traditional technique is budgetary control. Now, let us see what do we mean by budgetary control. Budgetary control is a technique of managerial control in which all operations are planned in advance in the form of budgets and actual results are compared with budgetary standards. Now, in this budgetary control, it is actually a technique of managerial control where they prepare budgets for all operations in the organization. So it may be relating to any department. So we have a budget for that department. For example, the sales budget. Then we also have the cash budget, we have the capital budget, we have the R&D budget, etc., production budget, etc. So with the help of these budgets, it will be easier for us to analyze how the work is being done in those departments. Then this comparison reveals the necessary actions to be taken so that organizational objectives are accomplished. So let us understand the meaning of the word budget. Budget is nothing but a financial plan for a specific period. So with the help of budgets, we will be able to forecast the quantity of work to be done and the money which has to be used for that particular job. So with the help of these budgets, we can ensure that all the work gets done in time and within the limited resources allocated for that particular work. Now, just let us analyze what are the advantages of having a budget. Now, the budgeting offers the following advantages. Now, budgeting focuses on specific and time-bound targets and thus helps in attainment of organizational objectives. Now, suppose if it is a cash budget. Now, in a cash budget, you will have the list of all the expenses of that particular month and you will also have a list of all the revenues for that particular month. Now, when you prepare a cash budget, then we will be analyzing the expenditure and also the possible revenues. So the revenues will be forecast. So we assume that we get certain amount of revenue from the sales. So in this way, we can ensure that the time-bound targets are reached in the organization. Then the second advantage of having a budget is it is a source of motivation to the employees who know the standards against which their performance will be appraised and thus enable them to perform better. So, budgeting is a source of motivation. Now, why we call it as a source of motivation? Because we will be telling the employees what is the standards expected from them. So, when each of the employee reaches the standard, he will know that he has excelled in his performance. So, when he excels in his performance, there will be a boosting of his morale, as a result of which it will instill confidence in him and this will act as a motivator for his future actions in the organization. So, we can say that budgeting is a source of motivation. Then, a next advantage of having a budget is budgeting helps in optimum utilization of resources by allocating them according to the requirements of different departments. Here we can see that there are various departments here which have been allocated the budget. Now, this budgeting will help us in optimum utilization of resources. So, we know that resources are very scarce and it has to be used very, very wisely. Now, when we are having a proper budget for each department, then it will ensure that they live within their limits or they spend within the limits which has been set by them, as a result of which we can ensure that the organization runs in a budgetary manner. Then, next advantage of having a budget is budgeting is also used for achieving coordination among different departments of an organization and highlights the interdependence between them. Now, why do we say that budget is useful in having coordination between different departments? Now, for example, now if you want to forecast the sales of a particular year for the next year, suppose you want to have sales of a product for 1 lakh units. then we have to be in coordination with the production department. We have to contact the production department and see that there is a production of at least 1 lakh units by next year. So only when there is coordination between these two departments, we can ensure that the sales target of achieving the sales of 1 lakh unit has been achieved. So in this way, we can ensure that the budgeting promotes coordination in the organization. So budgeting helps in coordinating the various departments of the organization. Then the fifth advantage of having a budget is it facilitates management by exception by stressing on those operations which deviate from the budgeted standards in a significant way. So, it facilitates management by exception. So, if you can recall, it is one method of analyzing the deviations. So, what do we mean by management by exception? In this management by exception, we say that when there is a small degree of deviation in the work which is being done, that is permissible. But if there are huge variations, only then it should be brought to the notice of the management and corrective action should be taken. Now, this is in principle of management by exception. So, the manager and the team, they can devote their time and attention for serious matters, and routine matters like a small deviation in the percentages can be neglected by the manager. So, this is brought about with the help of budgetary control. So, when you have a budget, when you say that there is a 2% increase or a 3% increase in the labor cost, that is permissible, then the manager can neglect those deviations and he can concentrate on those deviations which will have a more effect on the organization's success. So, it is essential to know that the budgeting helps in management by exception. So, I hope all of you have understood this session on controlling, where I have explained the controlling process, the 5 steps in the controlling process, and also the techniques of managerial control. In this, I have explained the traditional technique of managerial control. Thank you.